This webinar is sponsored by my friends at ironSource. For those of you here, I'm assuming you're pretty serious about growing your games business, which is why ironSource is the perfect sponsor. These guys are industry leaders for a reason, with their growth experts and tools such as their ROAS optimizer and in-app bidding solution Level Play, taking care of your game business while you focus on developing the best products. I highly recommend checking them out. I for one wish we used these guys in the early days of Next Games. Head on over to ironsrc.com to check them out. Hey game developer, are you looking for great new authentic video creatives? Try something totally new with influencer generated content IGC by Opera Event. Influencers and actors will make specific creative content for your games. An Opera Event will deliver you high quality video ads that highlight the best parts of your game. Get a free video with a purchase of 4 or more videos. Remember to say that Elite Game Developers sent you to claim your free video. Go to getigc.com to see some examples and get more information. That's getigc.com. Hey, let's get started. I'll give some logistics before we do the intro. So to all the attendees, if you have questions, we're going to spend some time at the end getting questions answered from the attendees. So please do go to the Q&A and put your questions there, and we'll get to those at the end. And without further ado, welcome everybody to this 2020 review webinar where we're going to be talking about last year, what happened in gaming, and we're going to throw in some predictions at the end as well for 2021. So I'm joined by Sergei and Anton from InvestGame.net on this one. So they just are releasing a report about 2021, which you will get more information soon, and it's going to be available at investgame.net. But I'll give the floor now to Anton and Sergei. So please take it from here. And before we start, can you do a short introduction on InvestGame for folks that haven't heard about you before?
Should I share the screen, Joachim?
Yeah, please do that.
Do you see the screen?
Yes.
Yeah.
Review. Okay, so you see it now.
Yes.
So yeah, as you may see, we've changed the logo.
Yeah, it looks fancy.
So yeah, a small intro about ourselves. My name is Sergei. I'm a co-founder of the platform which tracks the deals around the world only related to the gaming industry, called InvestGame.net. Also working as the investment associate at My Games Venture Capital Fund. So kind of my hobby that I'm doing on a sustainable basis.
Yeah, my name is Anton, and I also work for My Games. I'm the head of the media project, which is called Player One. So me and Sergei are colleagues. And yeah, I'm also a co-founder of InvestGame, and that's what we do as a side hustle, I would call it that. So yeah, what we do is we on a daily basis constantly track all announced deals in the gaming market. They are early and late stage deals, M&As, public offerings, like everything that is of interest in terms of the gaming deals in the world, in the whole world. Yeah. We also collect data about the most active gaming funds and strategic investors with deal types, value, and focus. So all of this data is present on investgame.net. You may go check it out while you watch the webinar. Sergei, could you continue?
Yes. So in addition to this, we're also trying to make some articles on a weekly basis covering the most interesting deals from our perspective, and also sending on a weekly basis our digest which you can subscribe to and get some additional insights about the market and our thoughts regarding the valuation, the future, and some predictions and strategies of the gaming companies. So I think that we can move on to the findings of our report that we have made for 2020. Before we move on, I would love to actually thank our team because they've been working very hard, and it's not only us together with Anton. We also have some team behind it, and the guys were making an incredible job during this New Year holidays. So special thanks to them, Andrei, Ivan, Grigory.
I hope they're watching.
Yeah. So special thanks to you. And yeah, let's jump in. So it's not a surprise for everyone that that COVID-19 pandemic and the lockdown caused changes in the people's behavior and their preferences, leading to the, I would say, bottom line improvements in the digital economy, and in particular, strong demand, leading to the strong demand of at-home activities. One of them being the gaming industry.
Yeah, absolutely. So as you may see in the report, we've tracked over $33.6 billion deal value across over 660 transactions, with game developers and publishers being the key driver of investment activity. So you may see all of that on the present slide. That's the dissection into major categories of gaming. In fact, over 50% of all deals are private investments, both VC and corporate. And that reaches new heights with this year with approximately $6 billion deal value and over 360 closed deals. So just think about the number. 360 deals, almost a deal a day, happened last year.
It is good. Like at this stage of the industry, kind of like where we are still in the pandemic, but the lockdowns started and people started adapting more gaming behaviors, which I think everybody's been talking about. Like, then thinking about the business of gaming, which areas of gaming really benefited the most from this pandemic and the lockdowns?
Well, speaking about the whole private investments market, key focus was on multi-platform game developers. They took nearly 40% of total raised value with, well, obviously, I guess many of you, if not every one of you, have heard about Epic Games and Roblox in top chart. In terms of the number of closed deals, mobile game companies were the most popular segment of investments. And that is kind of predictable, since lots of people started playing mobile games. So 20% of all deals were mobile game companies, followed by esports companies, 19%.
Are you guys switching the slides? I'm actually seeing this current slide constantly there.
So it was my bad. It was my bad. Yes. So
no worries. No worries. I was trying to follow. Yeah. So like thinking about this, the whole VC side of things, the early stage and that sector growing. Can you talk about the most active players here, Bitcraft, Galaxy, and Reason, and Makers? Like how did they do deals last year?
So yeah, I'm just going to start on this and Sergei will jump in. So as you may see from the table, the top three VC funds last year were Bitcraft Ventures, Galaxy Interactive, and not surprisingly, I guess, Andreessen Horowitz. So together, all of them closed around 16% of all deals last year. And all top three funds primarily invested in, as I've mentioned earlier, game developers and publishers.
So yeah, what was interesting about these three funds that actually each one of them has employed more than 50% of capital in game developers and publishers. So nevertheless, they still have investments in the esport activities, and ecosystem related, I would say, around gaming projects. The major part was devoted to the gaming. What was actually also very interesting about 2020 that we have seen many games specialized VC raising capital or having fundraising campaigns. The most notable news were from Griffin Gaming Partners, raising, if I'm not mistaken, 235, somewhere around this. Then followed by Beatcraft, raising over 160. And the rest funds like March Gaming, Transcend, V Games, Grecian Robotics, and some others. So I think that with interest rates being at historical lows and growing exit multiples that we see nowadays, institutional investors have shown strong demand for the pandemic-proof game industry. But on the other hand, what we might observe as well is that all of these funds are primarily headquartered in the United States. So we're speaking about the top 3 funds. And in fact, the US clearly dominated the global private investment market with over 75% of deal value being raised by the US-based startups. And actually, the top 10 largest rounds have been also closed by US startups. So quite a huge concentration of capital there.
Yeah, exactly. Yeah, thinking about like the M&A space then, like all the exits that were happening in 2020, what were your observations and findings there?
Anton, you're muted, I think, if you're speaking.
Sorry about that. I was just trying not to interrupt Sergei and forgot about that. Anyway, yeah, M&As have been amazing this last year, and the game industry actually thrived in 2020 in terms of exit deal activity, M&As, IPOs, showing an impressive recovery from the previous year and reaching $11.6 billion across about 220 closed transactions. That's important. We've seen multiple mega deals, both closed, including Big Games, $2 billion by Zynga, and Liu Technologies by Tencent, which was $1.4 billion. And announced deals as well, not yet closed. The one being, I guess, the biggest and the most hyped about deal of 2020, ZeniMax being bought by Microsoft. That was $7.5 billion. Also, Codemasters being bought finally by Electronic Arts, competing with Take-Two, and the price is $1.2 billion. So considering the recently announced acquisitions, the M&A's value would be $22.2 billion, making it, well, the record M&A year since 2016.
Yeah, so if we again, get a little bit much deep into the detail and data, I think that what we might see is that the most acquisitions were primarily closed by the public game companies. And we personally think that such strong deal activity, by public game companies was primarily driven by favorable underlying market conditions that we see nowadays, and a notable increase of valuation of publicly traded companies. So they get some cheap money on the markets and have increased their appetite significantly for the new acquisitions, trying to scale at a faster pace than typical organic growth.
Yeah, to me, like I think spending time on the public market, like what happened there for the webinars is super interesting, because I believe the changes are sort of like more short term versus like the early stages anyways. Like you're going to be betting for several years to see what happens with these companies in the early stage. But like in the public market, it has been a pretty impressive year for 2020. So can you talk about those companies and the most active ones there?
Of course. Yeah. So, the slide is there. Yeah, sure. Well, as you may see again from the table, there are 5 most active strategic investors with great influence on the industry. Of course, the number 1 is Tencent, including its subsidiaries. It's also Embracer, Stillfront, the guys from Sweden, Zynga, and Microsoft. And while Zynga and Microsoft expand through mega deals, as we have said earlier, Embracer and Stillfront accelerate their inorganic growth through multiple mid-size acquisitions with medium deal size of $100 million to $200 million.
Yeah, it's pretty impressive. So let's then talk about like what's happening in my neighboring country in Sweden, because it's really active what happened. I never seen anything like this happen. So gaming is definitely booming in the Stockholm First North Stock Exchange. Can you shed some light on that?
Yeah, I would say that it came like a surprise for everyone with this Sweden-based companies having a lot of having announced a lot of acquisitions throughout 2020. So, for example, if we take and combine all the Swedish game companies, they've been responsible for like over 30% of total number of announced M&A transactions in the gaming sector. So as you can see here in the pie chart, that is a significant value driven by Sweden-based companies. Of course, on the top list was Embracer, which I would say several times announced multiple acquisitions on one day, followed by Stillfront, which is more focused on mobile platform, but also with the recent acquisition of Sandbox Interactive, has added its some PC-based studio. And then followed by, I would say, an interesting companies that will probably select the same way of growing as Embracer and Stillfront did, like Inet Global, MTG, Thunderful Group that has actually recently made IPO, raising 150 million plus. So yeah, I think that looking forward in 2020, what we should expect is that we will see more acquisitions coming from these companies, since all of them are sitting on the cash. So there are plenty of cash that they have raised. If I'm not mistaken, Embracer right now has over 3 billion waiting for new acquisitions. So Lars will, of course, expand his empire of gaming studios. And what was interesting, if we speak about each one of them, is that Embracer, for example, starting this year, acquired several mobile gaming studios. So they have not only changed their focus from the PC premium market, but changed it to GAS, acquiring such studios as Saber Interactive, making some DLC for Metro series, acquiring 4A games, and right now entering in the mobile space. So that's a very interesting strategy. And let's see whether there will be more mobile deals coming from Embracer. On the other hand, we expect the Stillfront to continue acquire mobile studios. I don't personally, again, this is not a public advice for anyone, but just I don't think that personally Stillfront will change their focus and move into the PC and console segment. I think it's pretty hard to do. So they will probably continue acquiring other mobile gaming studios. And again, analyzing their strategies, the way they prefer to grow, I think that Embracer and Stillfront are still very different. If Embracer is like an M&A machine, acquiring everything on the market, of course, like selecting, yes, the targets, but still, it's hard to imagine that the gaming company can acquire 25 studios and get this synergy immediately. I mean, like, imagine they've made one really, I would say, big acquisition like Saber. Then it was followed by several mid-sized acquisitions and then a lot of small acquisitions. So I think that we will see what's going to happen with Embracer in 2021 and how they're going to deal with all of that, people growing, employees growing in the company, and a lot of new problems maybe rise in the future.
Yeah.
And regarding
go for it,
sorry, Joachim, regarding your mention of the neighboring country, we're also somehow expecting some companies from Finland, to join the race. And I especially liked your tweet last year about Helsinki being the capital of gaming in Europe, and followed by Istanbul. I believe, it was Istanbul.
Yeah, it is. It's. I think there are certain differences with like the public market and how you can leverage it with these countries. But yeah, it's probably a topic for another webinar at some point. So, let's get back to the Swedish public companies a bit later in this webinar. But let's just look at the overall public market at the moment.
Mm-hmm. Yeah, sure. So do we see the public market activity? The public offering activity nearly grounded to a halt in the first quarter of the last year. It was only $300 million but it shortly rebounded, demonstrating a strong growth afterward. So in the second quarter of the 2020, it was $4.6 billion, and it's eventually surpassed $15.1 billion by the end of the year. Obviously, the major event here is the Unity IPO. The Unity software, raised $1.3 billion with a current market cap close to $40 billion. So we shall see where this goes, obviously, but they really have shaken up the IPO market last year.
So despite macroeconomic volatility that is right now in the market, the renewed investor interest in the gaming space, in the gaming vertical, have stimulated IPOs and capital raising for many public companies in the second half of the year, as we can see here. So overall, around 10 game companies went public, and 8 more announced plans to go public. Among them, such companies as Playtika, Fuji Games, Roblox, then recently Motorsport, if I'm not mistaken, Games also announced the plan to go IPO. So that's an interesting thing that is happening right now in the market. And despite this, we also observed that many of the gaming companies have raised money, like Stillfront and Embracer, for an acquisitions using their capital, to make those. So I think that with interest rates being slow, we have also observed, many companies using the opportunity to refinance their existing credit facilities. That was done by Activision Blizzard, by Zynga, given that interest rates are really at historical lows right now. That also have boosted the overall public offerings activity in the second quarter. So yeah, here just just some examples of we've been talking a lot about favorable market dynamics, and prices going up. So here's just for our listeners the graph that they can see how the prices of the major large cap public gaming companies that everybody knows have increased throughout during the last 2 years. So if you look here, for example, the Activision Blizzard and Take-Two Interactive has shown almost 90% increase in share price over the last 2 years. That's an incredible growth. I mean, for the gaming company. Of course, comparing this with Tesla, that's not such interesting. But if we're speaking about the Tesla, we can look at the Sweden gaming companies, and here you see much extensive growth. Yes, so for example, the Stillfront, again, share price increased almost 8 times, while Embracer show 3 times increase. That's incredible. That's incredible.
Absolutely. We actually have, I believe, a question from the audience, and they also mentioned Tesla there. But I guess we'll get to that later a bit.
Okay.
Yeah, it's sort of growth at all cost mentality, which definitely has a lot of upside. Do you want to give some predictions for next year at this stage before we go to the questions? Because I have a few things in mind, and I have a slide here as well. But do you want to talk about the market at the moment and what it's looking like for 2021?
Yeah. So I would say that most of our predictions you will find out in our report later today, to be published on investgame.net. Sorry, Joachim, just a small advertising here.
Sure.
So yeah, I think that as we observed in 2020, public game companies will be the key driver of M&As going forward, and I think that it's going to be, the trend will continue. With Tencent and Nordic companies, continue consolidation of the market, and many US gaming companies joining this M&A game. I think that the Zynga will also join the game. They have just recently closed very large transactions, and they took some time, to integrate it, to kind of make synergy out of it. So probably will join. We also have recently seen the announcement of, Take-Two and Electronic Arts competing for Codemasters. So they are also probably joining this M&A game in the year, So yeah, we should expect more M&A activity from public game companies. The second prediction, I think, maybe that large game companies, despite having huge activity in the M&A side, will also bring more investments in the video game industry. forcing the competition with the traditional VC funds. So as we can see right now, for example, Apple and Supercell, yes, Supercell, yes, Supercell also joining the game of corporate investment. My Games itself is also very active at making corporate investments. So yeah, I think that the competition will overall increase, and why we see funds have attractive, I would say, terms for the partnership. Probably they can't bring, even if they try to, they can't bring that much expertise, and that much help to the studios looking to scale to another level, at a very short period of time. But of course, at the cost of valuation. So I mean, like if you select the independent, independent growth with the VCs, you of course will have much higher valuation probably at the later stage when you select to work with the corporate, with the corporation. Anton?
Yeah, absolutely agree. And upon the whole, well, we have agree, I believe, that this has just started. I mean, what we saw from the report in 2020, this is all like an early beginning, I believe, and there will be no correction in 2021. And even if the lockdown ends, which has been one of the major boosts for this market craziness, I would say. So yeah, this, even if the lockdowns end, I believe it will not stop anytime soon, at least in 2021, because I mean, first, the end of the lockdown is not going to happen in a day, right? So it's going to take months. And the second point being that there's already a habit. There's already a habit of playing games for those new audiences, and they're not going to drop this habit anytime soon. So on this, I agree with Sergei that the race is going to get faster. More companies, will join it, and we're in for something really great this year. I mean, judging by that Take-Two attempt to acquire Codemasters, obviously they still have those money. They're still gonna try at least to buy something else. Apart from that, we believe that game industry focused venture capital and private equity fundraising will continue to evolve, increasing the amount of those investments globally. And we also believe that we'll see some more successful IPOs of the gaming companies. So the key candidates are, well, obviously Epic Games. Something is definitely brewing there. Scopely, App11 as well. Taking into account the fact that, well, it's not the whole lockdown thing, unfortunately, for many people, it's not going to end anytime soon, and institutional investors will continue to increase their allocations in public game companies. So this roll-up thing, right? This roll-up strategy, some more companies will definitely try to use them. And well, we as a consequence of what we have said, we expect a higher level of valuation multiples in both public and private markets compared to the beginning of last year. So that's basically what we expect in 2021.
Yeah, I'll throw in some of my predictions for 2021. So I'm looking at the public companies and their buying spree. I think that's like, how do they grow is the big question. Like, there's now a lot of competition from Playtika going public soon. Huge Games doing the same. There's Scopely, rumors at least that Scopely will be doing that, and all the existing public companies, including the very bullish Swedish companies there as well. So I think we're reaching a point where there's more gaming studios, like, it's doubling the amount of public companies out there who are thinking about M&A, which like didn't exist like 2 years ago. And the big question for everybody will be like, how do they grow as companies? Because that is basically what the market will be rewarding them for, is the growth. So there's two options. I think first I want to cover the M&A side from my perspective. Like besides these studios like Playtika, Huge, Scopely, who are games companies, we have the Swedish holding companies who are already big in M&A, and they built the plumbing to bring in and consolidate these studios fairly well. I think Stillfront is doing an awesome job, from what I've heard from everybody who's close to Stillfront. And then you have companies like Zynga and Playtika who haven't been as active or aggressive. I would say, even though Zynga did place a big bet in 2020, I think it's doing more conservative, bigger work regarding building the relationships, whatnot. I think there was an interesting interview with on Deconstructor, and where they were interviewing Chris Petrovich who left Zynga recently. He was heading the M&A, and he talked a lot about like how they're doing the approach, which I feel is a bit different. There are some differentiations from the Swedish companies. But then what really happens for 2021 is the situation, like these are big question marks where I don't really know, like, are the best candidates already been picked? So is the M&A space sort of like empty, or is the discussion still going on? I believe there are a lot of options, a lot of companies still public, which are great companies to go and acquire. And my belief there is that the M&A will start focusing more on younger studios, which could be, pre-revenue, but they have, awesome games in soft launch, which is already one of the major hurdles in gaming, is to just discover a game that retains players. So in a sense, you already like past that point of M&A where you could think about, hey, this is probably not going to help us on the EBITDA side, but it will be better than going and building these games on our own. Like think about the merge gaming space now, which is really hot, and there's a lot of players in that space. Also the hybrid casual with Archero being the first game, sort of like big game there, but there's more. And of course, like games like Moon Active with Coin Master is sort of a newcomer into this space. So besides the M&A for growth, then you have the option to start launching new games. For these companies, it will be interesting to see if they can actually do any growth outside of M&A during 2021, if you just look at the public companies at the moment. So I personally cannot really name a hit game that was made by a publicly listed free-to-play company, which became, a top 20 game or top 10 game. Zynga has pretty much like brought all the companies into the frame, which have built the hit games already previously before they were acquired.
Well, if we're speaking about the large cap, yes, sorry, Joachim, if I can just
just interrupt, please.
The large cap is Call of Duty Mobile, which is a great example of very huge companies, collaboration and making something great together. I think on the right side, which belongs to Tencent, yes, it's Valorant or Valorant. I don't know, like this in your PC console game, yes. So I think that on the one side, yes, it is harder to make something, like great organically within the business. But still, I think that those studios that have been just recently acquired will continue to make great games. And it's just the question of the strategy that you apply when you acquire those studios. Either you make them, creativity staying free and out of this bureaucracy of huge, large public companies. So you're trying to keep the same culture of the gaming studio that you acquired, so that they can continue to be, to continue to have inspiration and something within themselves, to kind of to to show the market and just helping them with the financial side and with some user acquisition expertise, or you're joining them to your huge corporation, doing what you want and at the budgets that you want.
Yeah.
So well, we've talked a lot about the strategy of the Embracer and Stillfront, and I think that they're right now on the right track, as well as many other companies. So on the right track of joining the studios, saving the creativity, the original creativity there are, and just helping them with this financial side and user acquisition.
Yes. Yeah, it is in a sense an interesting bet. If you acquire 20 companies, do you place 20 bets on them finding the next hit game as a, an exercise? So we'll see what happens. But then think about like my predictions for the M&A strategy regarding like going a bit earlier in what you're acquiring. I think it's a clear stage that could be the Series A, where there are developers currently raising, after they've established all the metrics that the game could be scaled, they raise the Series A. So there's already happening M&A in this side, like Supercell taking this major stake in Metacore, the Merge Mansion developer, last year. So in a sense, like Supercell, which isn't a public company, but there's a model there where if you can move early as a public company and secure sort of titles that are coming out in 2021 or 2022 after they've been in soft launch for a year, might be an interesting strategy that I'm at least looking forward to seeing more. But yeah, the challenge there is that there, like in these cases, there wouldn't be an immediate effect on the EBITDA of any of these companies. So I think the challenge there is to educate the market on these pre-revenue opportunities as being a smart acquisition move. Do you guys have anything to add before we go to Q&A?
Yeah. So just a few maybe comments to your words. So I think that this is like two different strategies. The strategy number one, you acquire a profitable, sustainable gaming studios and helping them to scale to the next level, where they already know, already understand the user acquisition. They already understand a lot of things, that how does it work and how to scale the game, and probably need some, I don't know, like maybe like Big Brother to compete with the big guys within the genre. That's number one strategy. Yes, this is like acquisition, like Storm8, for example. These guys were already very successful. So probably there is a very small help from Stillfront, on their side, because Storm8 was already a very successful business. And many others that they have already acquired were already a very sustainable and good business. And completely different strategy is when you're trying, from this very risky stage at the soft launch, or just, just the start of the global release, helping the guys to scale. Because despite that, you have to share your user acquisition expertise. You also have to teach them. You also have to show them how to do it. You also have to, kind of overcome all the problems together with them. And this requires a lot of attention, a lot of people, a lot of work, and a lot of, I would say, resources of the huge strategics. And not, I would say, not all of them are ready to provide this help. I mean, like, the approach that you were speaking about is more like about the approach of my games. Yes, so what we are trying to do is we're trying to help the studios at this stage. Yes, we're overcoming all these problems. So that's a little bit different way. That's a typical difficult way, but still we have a track of success doing those. And I think that what you've mentioned regarding this, are there left any good any good studios left for M&A yeah, in the years, in the following years? Well, first of all, what we have discovered in 2020 is the delisting of public gaming companies. So even if you're public, it doesn't mean that you can be acquired. We've seen this with Leo Technologies. We've seen this with the Codemasters right now. Yes, with Electronic Arts competing for this. So still, public gaming companies are still there, and large gaming businesses like Tencent, like Big Four, let's call them this way, can still consolidate these companies and acquire those studios if they find it reasonable for them. Second, what we will observe is, I'm absolutely agree with you that the average check size will probably, the average revenue of the target will probably decrease, because a lot of already well-established gaming businesses has been acquired. There are, of course, studios left, great studios left on the market that still can be acquired. But I think that some of them will also think about the IPO way. Yes, thinking about staying independent, evolving the business further without joining someone else. So yes, absolutely agree that probably we will see more M&As moving from these large sustainable businesses more towards some small businesses which just in the scaling phase. So yeah, absolutely agree here.
Yeah.
Man, I love listening to him. Like he can go on and on with this, man.
Yeah, like just quick comment on that. I think like if you go early, the problem there is that if you go the VC route at that scaling phase versus get acquired, you're sort of like keeping your independence, and maybe in few years your company could be a unicorn, versus if you sell too early. So I think this is the big question that then the founders and like the early stage VCs will contemplate on, like what is actually happening when the game starts scaling. So yeah, it's not a sure bet for sure. Like going that route is difficult.
We actually have, I believe, a question which is pretty much about the same.
Let's jump into the questions. Yeah, I think it's good. First, let's go chronologically. The first question, in case it hasn't been covered by the end, when, how this M&A craze will end, and who will be the losers? Talking on the dev side of it, maybe. What are your thoughts, guys?
Well, again, as we have mentioned in the prediction section, so we do not think that this craze will end, at least this year, obviously. So it's not, the stakes are super high, and I personally do not believe that the public companies will like pull a stop on this thing this year. And again, the habits are there, and the lockdown is here, and so all of these patterns that have been developed last year, they're all here. So the craze will not stop. And as for the losers, well, I'm not sure about the correct like the correct position of the question. So obviously the losers, there might be none, I believe. So the gaming will have its correction, obviously, and it's only a question of time. But as for the losers, I'm not sure there will be any. But maybe, I don't know, Sergei has another opinion.
Yeah, I would say that, speaking about this M&A activity, that this is not the first year, yes, when we've seen. I mean, like, we've seen a lot of activity in terms of the number of the deals, but the valuation of mergers and acquisitions in the previous years has been also very significant. It's just right now we've seen a lot of people talking about it. That's why you can have this feeling that the market is kind of exploding. So we should always bear in mind that gaming market is still not mature market. So it's still an evolving and growing market, and the consolidation is still yet to happen. So even though we see such huge players as Tencent, having a lot of stakes somewhere, everywhere, probably in each studio in the world, so though it's still a very, I would say, decentralized market. So it's not like one company, owning 30% of the market. It's not yet. But we are moving towards it, and I think this is okay in general for the market, for the industry, move towards such way. And then you will see new startups, competing with this old guys, etc. This is how the market behaves, actually. Speaking about the losers, I think that's important to understand that not each M&A deal could become a successful deal in terms of the returns that you make on it. So even though the probability of success is much higher, First, because you're strategic and you understand what you're doing. So you have expertise, and you have the right people to assess the opportunity and to make the acquisition. Second, because you're not only betting, but you're also actually participating in making this deal success. So it's not like you're just evaluating the target, acquiring it, and just sitting and waiting. No, you're also participating. You're helping it. So it's also your forces included in it to become it successful. But still, not all M&A deals are successful. So losers, I think that's maybe not the best word to describe here, but some of the mergers acquisitions, of course, will be not that much successful in terms of the buyers who made them. Yeah, I think that would be fair to say.
Yeah, I'm gonna move on. This is the Tesla question. Like, there's a like, is the game industry kind of like mimicking the general economy of the liquidity and the markets and this kind of like, all these consequences of being in this kind of like where there's so much capital available in the world, where everything's been driven up, like this, like the whole global like craze that is being going on in the stock markets could have some consequences, right? What do you guys think?
So do you have anything to say right now?
I would say that's a difficult question. It's more question related to the investment banker guys, who are following the market, who are reading all this, public stock reports, etc. What I can say from my perspective is that market is extremely hot. I mean, the general market nowadays, and the stock prices are really very, very large. Have shown significant increase despite the macroeconomic situation that we have worldwide. So probably there will be some changes, and even if you go to the Wall Street Journal or I don't know Bloomberg and read the news there are also a lot of analysts writing about this, that there is a note of that market is really hot right now. And of course, gaming market is not the largest market if we're speaking about overall situation of I don't know S&P 500. Yes, gaming is very small compared to all the rest guys, big guys like Facebook, like Apple, etc. So in any way, we will follow, the gaming market will follow the general trend, but it has its own, I would say, its own way. That's the only thing that I can answer here.
Yeah,
so
I don't
just not to be considered an investment advice here, guys.
yeah,
for sure.
What do you guys think? I can like answer for sure this question first. Like, what do you think about the growth of the merge games genre for 2021? So my personal feeling is because there's big studios getting into that game as well, into that genre. I think the CPI, the cost per install, will start increasing. It's sort of like playing the same role as back in the day with Match 3 when you had King, and then all the sort of like other puzzle games started appearing. But merge is kind of like a bigger new genre that didn't exist previously, and seems like it's being loved by the puzzle audience. So I feel that the problem is that the CPIs will start scaling up. So there's not that much time to get on the merge bandwagon, I feel. Any thoughts, guys?
Well, again, the question more related to the I would say deconstructor of fun rather than to InvestGame guys. But still, yes.
Just watching.
What do you think? What do you think about the growth? Well, that's kind of somehow new gameplay. Yes, that came to the market. It will happen 2021. That there will be a new trend again. So it happens each year. So what can we say? What do we think? We think that this is great. This is great. That still, there will 20 plus years, I don't know, like 15 plus years, yes, since launch of App Store and Google Play. And the gaming, the mobile gaming market always have something new to introduce to the people. That's great. That's the only thing I think we can say here. And there was some deal, not only with the Supercell, but also Big Fish Games acquiring EverMerge. So yeah.
Yeah, I mean, from the global perspective, the more the merrier. Obviously, the more audiences are there in mobile gaming, in console gaming. Well, speaking about merge in mobile gaming, the better for all of us. And again, taking into account the fact that people are still mostly sitting at their homes, and the at-home entertainment industry is still getting boosted actually. So yeah, it's gonna go on, and I agree with Joachim here that it will soon be probably too late to get onto this train. And well, if the question is about whether and how soon will it end, then I guess not in 2021, at least.
Yeah. Question here, which we sort of touched base on, but if you have anything to add. So the concern with the Swedish market, with these investments growing so fast, valuations so high, is there a risk there of sort of overcooking? How do you feel? Anything to add to what we already said?
I would say the general risk is to understand whether all these acquisitions would really add value, on a sustainable basis, meaning not only in 2022, adding EBITDA, yes, as a result of the acquisition, but what is going to happen with all of the studios in the years going forward. So we should all, what shall we, do in order to understand either this is like a growing too fast or not, is to look for the studios that have been acquired. Look at the metrics, look at the revenue, financial, what is happening with that. And you can find all this information, the annual reports of all these Sweden-based companies, so or Epany, or Magic, or Sensor Tower. So in order to understand whether it's growing too fast or not too fast, we should look at the data and then compare what were the initial targets and what is really happening with those. So far, so good.
Yes,
that's all that we can say.
Yeah. Do you feel that there's another question here regarding the bigger acquisitions that happened with like the Codemasters deal, Zenimax, like bigger deals versus then the smaller deals of Embracer and the others? Do you think any of these groups may be overstretching or ultimately heading for a big fall there?
It does seem to me that there's the vibe of everyone expecting things to go down suddenly, like judging by the questions at least. Like everybody's like waiting for the companies to fall, to fail.
Yeah. Personally, I feel that there is definitely like the risk regarding game launch is always the trickiest bit, like we saw with CD Projekt and Cyberpunk. That's a big sort of like a reminder of what already happened in 2021. Like sort of like the ramifications are now sort of like being seen.
There's this point that when we're speaking about such mega deals like Microsoft and Codemasters and Electronic Arts, that it may be easy to get overexcited when there's that big money, such big money, and everyone is talking about games and the gaming market. It is very much easy to forget that it's actually a kind of complicated process. I mean, the game development and making games in either mobile or console or PC games. And the example that you have just brought with the CD Projekt Red proves that even with lots of experience, with years of production, and with millions of dollars in the budget, it may still be very much possible to fail. So, well, personally, I will not make any bets of who will actually fail in the years to come. May be 2021 or 2022, or I don't know, maybe 4 or 5 years later. But obviously, the chance is always there. Again, even talking about the Zenimax deal. So we all remember what happened with the Fallout 76. And the chance is always there. But I mean, talking about the big fall for anyone in particular, I would not place any bet right now.
Yeah. So, question about the IDFA. I think we didn't touch base on that yet, so it's good to kind of cover. My personal feeling is that this is one of those changes that sort of like all the boats that are sort of like floating at the moment at the surface, which are the games companies, the tide will go down and everybody will follow the tide, and then it will sort of like come back when everybody knows what they should be doing. So basically CPIs will be balanced according to what people are figuring out. I think people sort of share that information, and there won't be like somebody holding, you know, the secret sauce for a year and the rest will be struggling. I don't know, what's your take?
I would say on the M&A side, maybe right now some buyers, trying to hedge their positions and risks around making acquisitions of the studios, which will be most probably affected the most by the IDFA. So we should probably see this happening in the market. So, but I think that eventually this year, maybe it will somehow a little bit stop the M&A activity if some concerns would arise. I mean, like if some concerns would arise, and everybody will understand that they need to take some time to understand how to tackle this problem with the IDFA. Yes, what will really happen? But I would say each year there are problems that rise from nowhere, and this is like a typical problem that each gaming company should solve. It's not like for someone, it's for everyone. So I think that gaming companies will deal with this, and in general, again, it will not influence maybe the market that much. It's just going to be the new rules, and we will just follow them.
Yeah, I feel the same way, really. Moving on here, we didn't really talk about what really is happening after, because you covered the private investing side, the VC landscape, but there's not much interest happening in the Series C, D, E. Well, there's Scopely doing big stuff, and do you think like these studios that are remaining independent until that point, like, is there still like some kind of advantage of a platform to be built there where they could leverage other forms of capital besides going into the public market? What do you think?
Well, at least what we observed in 2020, yes, all these huge rounds were raised by companies which are already very profitable and don't have any issues with financing their operations. And I think that if we're speaking about the game developers, speaking about Series C round, they're most definitely 99% are profitable, because gaming business in general is profitable. It's not like Uber. So the economy, the unit economy there is, let's say, quite clear that it should result in profitability moving forward. Now, there can be a scaling phase in the beginning, but it's not Series C round. I think it's Series A, when you might need some certain amount of money, going with negative EBITDA, scaling the game, and then have profitability. So returning back to the question with a Series C round, the only thing that you would need to raise money is to make probably acquisitions. So probably growing much faster than you can do on your own basis. That at least what we have seen with, I think, AppLovin, with Scopely. Haven't seen that much with Roblox yet, but Roblox is going public. So, and Epic Games was also, very active in terms of the acquisitions this year. So probably they're raising money for the acquisitions. Will there be any other independent studios going forward? I think yes, there will be. There are always some, I would say, some studios that prefer to stay independent, prefer to do it on their own way, and yep, that's the only thing I can comment here.
Yeah. One final question for both of you. What will be the next big M&A target this year? I'll go
like-
last.
You mean mega deal, or you mean
Yeah, like the
Yeah,
biggest
like
one.
several billion.
That's again, that's not the the recommendation to. That's just a wild guess.
Yes.
But I'm gonna let you guys guess first.
Okay. I think it's Moon Active will be bought. I think that will happen by somebody. They won't buy other companies. They will be get bought.
Well, I know for sure that there'll be a lot of successful IPOs. So this will probably maybe several of them will be like huge IPOs, but not sure for this because they don't have any intention to raise money. So probably we'll choose direct listing, given that recently US market has approved direct listing as a procedure to going public without raising too much money. So they'll be probably they'll become more popular among gaming companies in particular. That's for sure. Speaking about large acquisitions or large deal, maybe Clarix would come up with something. And if Clarix gonna do something with all that they have, it's gonna be huge. It's gonna be very huge. So let's see.
Yeah. All right. Anton is gonna give something.
Yeah. So you guys are talking about mobile only, right?
Or whatever feels like in the gaming space is gonna be big.
Yeah, I'll just have to think about this. I'm not sure about the particular target, but I'm thinking more about the multi-platform target, and that might be. Well, there are a lot of candidates, man. I'm just not sure about the one in particular.
You can keep several.
No, I mean. Talk about Codemasters, right? That is not one obvious target for the acquisition, at least for me. I mean, but still, at $1.2 billion there. So I'll just have to think about that. And since there are several questions left, I guess we could collect them and maybe answer later.
Yeah, we could do the answering in your newsletter and mine as well.
So will they be available after the webinar?
Yeah, they will.
Okay, because I have seen every one of them, and there are some interesting left.
Yeah.
So
we'll get back to those. Yeah.
Okay.
Good idea.
And the one for there's some anonymous question about Zynga buying Rollic. So I've just dropped a link to InvestGame. Sorry about that, Joachim.
Oh, yeah.
So yeah, we've covered we've covered the deal last year, and there's strategic rationale there. So you're just gonna go for the link and maybe read about that. And if you still got the question, maybe we can drop us the message on the I don't know, Facebook, LinkedIn, anywhere.
Yeah. And maybe just to finish, the general disclaimer: all our opinions are our own opinions and not opinion of my games or any company that we working with. So please bear that in mind. That's just a personal, friendly talk with Joachim.
Yeah, it's nothing too serious.
We're just guys who love games a lot. Sorry.
Exactly. Hey, the report, is it now there on investgame.net? People can get it.
We will place it later today. So just follow the investgame.net and you'll see it here. And of course, we will share it with you, Joachim.
Cool. All right. We'll be sharing that. Thanks, guys. Thanks, everybody, for joining. Take care. Enjoy the day. Bye-bye.
Thank you, guys. Bye. Stay safe.